Hi, I'm Cheryl-Lynn Freeman, CEO of Mzansi Business Services. One sector that I'm very passionate about that I have been involved in for almost over 10 years is the NPO sector. And there's one area that I know is a very big gap when it comes to the NPO sector, and even those professionals that make that shift from commercial and being in the business space to being in the NPO space is understanding what exactly is the environment, the legislative environment that I'm getting myself into, what is required, what makes things different. And then you get those that have been involved in the sector from a community aspect. But when it comes to really the admin side, they'd rather run 100 miles away from that. So this course is really about just giving you an overview. You could be a board member. Usually it's those board members that have a heart for doing something, but they took the chance to sit on the board, but they still need a bit of development in or a little bit of insight and knowledge into certain areas. And I think it's important because if you don't have knowledge of those areas, you could place the NPO at risk, and more so, you could place that non-profit at risk of being deregistered. And that is a process that has gone through in South Africa. Whether the Department of Social Development will ever go through that process again in terms of deregistering NPOs, well, who knows. But hopefully after this course you'll gain some real good insight. It's very high level, but the purpose of it is just to be able to provide you with some basic knowledge of certain areas of compliance that I think is important, that I would like to highlight as an accountant and a tax practitioner working with different types of NPOs for years and even being involved in auditing them as well. So there are 5 areas that I'm going to be discussing with you, and I'm going to try and cover as much as I can for this NPO compliance course. The one is looking at just some NPO finance basics, which I think is important in understanding. Also NPO financial obligations, and looking at what is an audit report versus an accounting officer report. And then also looking at project budgeting and donor reporting, and then PBO registration and tax compliance. To be able to identify your income that you're getting and the expenses from a financial perspective, it's important to understand what each of those represent. So in your mind, I'm sure you've got a few examples, and the big one that stands out when it comes to income is donations, whether it's international, whether it's local donations that you received that you can categorize as income. Another area to look at is your expenses, and that's basically what the organization has paid out to various third parties, various suppliers that has provided you with a service or product of some kind. Then you get 3 other financial categories that's important to identify when you are looking at financial transactions, and that is assets. Assets is essentially something that is a resource in your business that is owned or that you legally control, because you bear the risks of having that asset if something happens to it and you burn it in a fire or something, and you have the responsibility of replacing it, and the rewards of being able to utilize that in the organization or to better serve your beneficiaries. That is what you could categorize as an asset. Some examples are your computer equipment, furniture, a vehicle that you might purchase, or even a building to that extent. Even though you might even finance that building not from the organization itself, but through some sort of other debt, you can still identify that building as an asset in your books. Another area to look at is liabilities. What is it that we are owing to third parties? And that's your suppliers, that's your creditors. Those are people that you've engaged with that you have not yet paid money to, but because they've delivered a product or service, it's money that you actually owe to them. So those are your liabilities. It could be creditors. Trade payables is another generic accounting term that is used for creditors. And then you would get your loans. You might have a loan or overdraft facility of some kind in the entity that you have, and that specifically relates to a liability. And then last but not least, we look at something called equity as our final financial category. So we looked at income, we looked at expenses, we looked at assets, and we looked at liabilities. So equity represents two things. One, contributions that's been made by members into the organization itself. From a business perspective, you would probably identify this as capital, but we don't use that term from a non-profit perspective. We use the term contribution capital or contribution by members specifically. Then you also get what we call, you know it in business as profit or losses, but in this case it's called accumulated profit or loss, or accumulated surpluses or deficits. A surplus in non-profit terms is what we use to equate to in business terms what would be a profit. Then you would get your deficit in non-profit terms. In business terms, you can equate that to being a loss. So you get a surplus when you've got your income that you've received that is greater than your expenses that you have paid out. And then you get your deficit where your income that you're getting in, the money you get in, is less than the expenses that you've actually paid out. There are different sections to a financial statement that represents the assets, liabilities, and equity. I'm not necessarily going to show you that in this course itself, but I will provide you with links to be able to refer back to it and additional notes that I have regarding that and understanding each section as we go along. The same with the statement of comprehensive income. That is another financial statement, and on there it would reflect your income and would reflect your expenses, and I will have an example of that for you with additional notes as well. Then we have another financial statement. It's called the statement of cash flows, and I think of all the other financial statements, this is the most important to look at. And the reason why this is important is because it represents the real position of the organization, I think, from a financial perspective at that point in time. Tells you what is the amount of money that you fundraised, that you've received from donors, that the organization itself maybe did for consulting of some kind or other initiatives, or maybe even a tender received by the organization. It will also tell you of monies that you've paid in terms of expenses, and this is actual mullah that you've paid out to your various creditors or service providers. Then it will tell you what is your balances in your bank account. It will tell you how much money you've invested in assets or what money you've received, if you've sold assets, any investments that's been made, any loans that's been taken out. It's all representative of cash movement, and that is what's reflected in your cash flow statement. So if someone provides you with a set of annual financial statements, I would hit two places directly. Yes, I would look at the balance sheet, but I would look at the detailed income statement, and then I would also look at the cash flow statement to see, okay, where is this organization at now? And then you'll be able to see the other areas. Sometimes it's very unlikely that there are other amounts that's owing to third parties that an NPO of maybe a smaller nature would have significant amount of debt. So it's not such an attention drawing or attention begging line item of sorts when it comes to looking at your liabilities. So I would definitely look at what is the cash flow like in the organization. There are some important questions that you can ask if you are on a committee, if you are the treasurer, if you are on the board and you are presented with a set of financial statements. It could be quarterly, it could be monthly accounts that you receive, it could be annual financial statements that's been issued either by your accountant or by your auditor. So I'm just going to touch on a few of those questions that you can ask when you do look at your financial statements. The first question you can ask is how long or what was the last time the audit was conducted, and what does the auditor's opinion say. And in this case, I can tell you that unqualified is a good thing. Unqualified means that they didn't really find any funnies, that everything is in order, and that the financial affairs of the organization has been running according to the actual financial policies in place or according to the relevant standards that's applicable. When you have a qualification, you could have a qualification with just certain areas of concern that they might raise to raise that opinion itself, or they have insufficient evidence in a certain area that they've tested that they cannot give or provide an opinion on. Then you get your balance sheet. So with your balance sheet, that is where you see your assets, you see your liabilities, you see your equity from there. Then you need to ask yourself, and I've mentioned this to you before, does the organization have enough ready cash? Do they have cash in the bank listed under your current assets when you look at your balance sheet? And then, is there enough money to pay off any creditors that you might see in the books? That's another question that you can ask. You also need to ask, how long will the organization survive before the funds dry up? There, it will be a combination of an answer with regards to looking at your cash in your bank and then looking at what are your monthly operational costs. If you take that money that you have in the bank, plus maybe some funds that you've secured through a donor contract itself, you can add that and then you divide it by your average monthly operational cost and project cost. Then you'll know the number of months or the period the organization itself will last. And then also ask questions about the income and expenditure. If you see anything that looks funny, sometimes they use items such as miscellaneous, or they use a suspense account, which you should not be seeing, or they have general expenses, or they have other expenses. Those could be areas of potential fraud, and where you may be hiding expenses that are either of personal nature or not legitimate, that you wouldn't want others to necessarily see easily. So it's good to investigate those kind of line items. And then also make sure that there are no amounts that's owing. Ask, are there any amounts? Are we sure that there are not any amounts that's owing to other third parties? And it's important because you could have this big debt. Suddenly you have nice money in the bank and nice balance, but then you find out, hey, I'm owing all this money to a creditor or suppliers that you haven't paid yet. So be careful to make sure that you account for all your expenses, including those expenses that has not yet been paid. Another question you could ask is, what is the balance of direct project costs versus admin costs? Usually the project cost is between 70 and 80% of your total budget, whereas your admin could be only up to 15%. And it's important to look at this ratio because donors want to essentially see that their return on investment, they want to see that the organization is actually investing in project costs. And if you've got salaries, if you've got telephone, if you've got other forms of utilities, what you need to do is apportion those costs into your project costs, because you cannot run the project essentially without a running organization. So you need to argue that those costs are also important. Even if you look at a financial manager or an accountant or bookkeeper that you have is involved in the reporting for your projects, which means it justifies actually allocating part of their salary towards actual project costs. And it won't necessarily come up as a salary item. You could put it as grant management or donor reporting or monitoring and evaluation. Then if you are looking at the budget monitoring report, you can look at what are the expenses broadly according or compared to budget. And in that case, you need a report they will provide you with your actuals compared to the budget for that particular period. One thing that's important to remember when you're looking at comparisons, that you must compare apples with apples. So you cannot take a monthly report and then compare it to an annual budget. You need to what we call flex that budget so that it represents 1 month, and then you can compare it to another month. If you are taking it quarterly, you take the quarterly figures and you then divide your budget into a quarterly budget to be able to properly analyze. Because remember, your financial reports, your management reports' main purpose is to be able to enhance decision making so that you can know, okay, we have this amount of resources, where can we actually move around funds if maybe there's a new project that might not potentially be funded because it's maybe something, a new idea, new initiative of some kind, or there might be some projects you need to drop and ones that you need to maintain. So it's important that you keep proper track of those costs. There's a number of other questions, so what I'm going to do for you is that you can look through these questions. I'm going to refer you to the notes that goes with this course so that you can reflect on those questions and make sure that as you review financial statements, as I was a financial manager, the last job that I had, I was the National Finance and Operational Manager for Habitat for Humanity South Africa. And I was sitting on a number of boards and as also a financial manager for a number of other non-profit organizations. And the one thing I found is that sometimes financial information would be sent out a week, 2 weeks to the board, but no one would have a look at it. I think it's really important because sustainability is always a challenge for every non-profit organization, and even more so in the crises that come up, and also looking at the funding pool that's getting smaller and smaller. So it's important that you step up your governance to make sure that you are a reputable organization and that donors would prefer you and trust you over others. You would also need to look at what are the level of activities and other kinds of questions when you look at financial reports. One really key aspect when you're looking at non-profit compliance and just overall financial management is what really are the obligations. If you're registered as a non-profit organization with the Department of Social Development, you've got your NPO certificate, a year later, what happens now? You have to submit an annual report to the Department of Social Development 9 months after your financial year end. What do these reports consist of? Well, you've got 3 aspects to this report. You have the one aspect where they want to know, has your organizational details been updated? Are your office bearers, the latest office bearers that you have, with their correct contact details? The second part of that is, what are the projects that you have been carrying out as a non-profit that is aligned to your constitution and the initiatives that you've taken on for that particular financial year? What are your beneficiaries like in terms of who did you serve and how many people were impacted by what you did and what exactly you did? So you need to provide a description of that project itself. And then from there, you need to provide your financial statements. And there are 3 important, or at least 2 of the 3 that's important statements that you need to have. You need to present an income statement, you need to present a balance sheet. You can present a cash flow statement, but it's not required. And one of the things that I saw an organization miss is that they had financial statements that the accountant prepared. However, the accountant did not provide an accounting officer report. And basically your report to DSD becomes null and void. Your financial report becomes null and void if you do not have your accounting officer report with your accounting officer that's signed off, and make sure that you include their practice number. I know that some audit reports will not have the practice number of the auditor, but please make sure that you get it, because that will be part of your submission to DSD. Otherwise they will reject that report that you've tried to submit. If you are a non-profit organization or a non-profit company that's formed as a non-profit company with CIPC, you have an additional obligation to submit what we call an annual return to CIPC. That is when you look at what is your annual income that you've received in the organization for your financial year. Then you would calculate for that particular year what your CIPC annual fee would be on CIPC, or you would have your accountant do that and they will relay to you what you need to pay. And then you would complete, if you've got audited financial statements, then you would upload that audited financial statements. If you don't have that, and maybe you just have reviewed financial statements or internally compiled financial statements, then you can complete what we call a financial accountability supplementary form for CIPC, which forms part of that annual return. And it's just basically wanting to know what kind of controls you have in place, who's monitoring your financial transactions and providing you with that relevant advice and information that you need? Are there any maybe extraordinary transactions that they should also be aware of? But that is standardized questions that you get, so it's not heavy work that needs to be done in terms of that, but please be aware of it, because I would not want your organization to go into deregistration at any point in time. Another important thing is when you either change your constitution, which is your founding document, then you need to inform, if you are an NPO, you need to inform the Department of Social Development. They've been pretty good nowadays with developing standardized templates that you could do for changes in constitution, in office bearers, in needing to obtain your NPO certificate and things like that. And then also, if you've got what we call for a non-profit company, memorandum of incorporation, and you've changed that, there's a CIPC process with regards to that. So please make sure you change those documents, and those documents are very key. Don't just take that for granted even at the beginning of your registration, because those documents are needed to apply for your tax exemption status. The other thing that I would want to cover with it, there does seem to be some level of confusion when people ask me sometimes to do audited financials. Then I tell them I will compile annual financials with an accounting officer report and not an audit report, because I'm not a qualified auditor, I'm a qualified accountant. And then they would frown, because in their minds they think it's the same thing, but it's actually not. An audit report is an audit report that is produced by a qualified and registered auditor. And please make sure that you get the auditor's practice number so that you know that this person is legit. It's basically the highest level of assurance that you would get for a set of financial statements that is produced. You also need to check your funder agreements, because you might have some of those entities or donors that want you or compel the organization to provide audited financial statements. They basically look at three essential things when they look at your financial transactions. Are they valid, which means are they authorized, and are they genuine expenses that relate to the organization? Is it accurate? Are the numbers correct? Are they balancing in the way that they should? The third is it complete? That means there's nothing left out, and that all your financial records have been completely included in your accounting records, and that there's nothing left that might maybe understate your income or maybe understate your expenses as well. With your accounting officer report, that is your minimum requirement for the Department of Social Development. So you don't need to have a set of audited financials for your Department of Social Development. And then you need to look at year-to-year review and high-level analysis. It's basically a high-level analysis of your accounts. So they don't go as in depth as they do with an audit, but unless an audit is either mentioned in your constitution, that would beg a requirement. Otherwise you have to change your constitution, or it's a requirement by an external party or external funder that you might have. That is all the time I have with regards to just providing some sort of overview with regards to NPO finance, as well as standard obligations that's required. One more thing that I do want to add is there's this misconception that NPOs do not submit tax returns. You still need to be registered for income tax, and you need to submit annual tax returns. Even when you are granted tax exemption status, you are still required to submit a return every single year. Please do look around for other courses that I have regarding specific tax as it relates to non-profit organizations. I hope this information was useful to you in some way. You're more than welcome to contact me at any point in time. My details are in the video, and you can also follow us on Facebook, as well as check out the website. Thank you so much.